And now let's take a look at the bigger picture. David Dietze is here, a managing principal, senior portfolio strategist, PPAC Private Wealth Management here on the desk. And we're very Christmassy. He's got his green, I have my red. So it's nice to see you, David. Welcome to the set. Some of your thoughts, big picture?
Yeah, absolutely. So we're coming off our roller coaster week last week where, after we're up over 20% year to date, but now there are a couple flies in the ointment coming into 2025. The big shock, of course, was instead of 4 rate cuts next year, Federal Reserve via the dot plot said there's only going to be 2, and that we're not going to hit that 2% target inflation rate till 2026. And of course, we saw a little bit of a fumbling of the ball when it came to passing the budget resolution. We thought that there was going to be a unified Republican group of lawmakers there, headed by Trump, who was going to get through tax cuts, going to get through efficiency things. And what did we see? A lot of going back and forth. And one of the key things that Mr. Trump wanted was to either increase or get rid of that debt limit. Did not occur, which suggests that perhaps there's a risk that some of his policies that the market has gotten so excited about may not all come to pass.
Look, I mean, there are some people who have already priced in some of the good things, right? I mean, they say that if you have a lower tax rate for businesses, they like that. Is the market going to see new highs or not necessarily? What do you think?
Well, so we're looking for more muted returns next year, maybe in the 5 to 10% area. I mean, we've had back-to-back 20% plus years. It's very rare then to have a third year that's up 20%. Last time we saw that was in the 1990s, and I'm afraid that, given how this market has surged since Election Day, some of the 2025 gains have been pulled forward.
Yeah, I mean, there are some people who say he gauges his success by the stock market. So he's going to want to try to give it a nudge to hit some new highs, but maybe not in the first days of office. That being said, let's talk about, so we got the Fed out of the way. You said the 2 cuts instead of the 4 cuts. You think we'll get the 2 cuts?
There's a 1 in 5 chance we get no cuts.
That's what I'm saying.
They're all data dependent, and we saw last week, of course, some inflation statistics coming in hotter than expected. Now the PCE on Friday was a little bit better than expected, but she loves me not. We just don't know until this data comes out. With the market at all-time highs, wealthy consumers are spending hand over fist, and so inflation could rise its ugly head again, and that's a real risk that's going to put the Fed on the sidelines. To be honest with you, Nicole, who's really running the show here is the bond market. We've seen that 10-year interest rate move up almost 1 full percentage point since September.
Right.
You can now get 2.3% on tips. What does that mean? You get a guaranteed 2.3% over inflation for the next 10 years. For a lot of people who are sitting in money market accounts, that's going to be of interest to them. Those who are selling us alternative investments, that's going to be a tough bogey that they're going to have to compete against.
That's true. I like how he throws in his golf terms. You saw Tiger Woods' son with the hole-in-one? That was so exciting. I had to throw that in, okay, because that was exciting. Let's talk about your stock picks. You have Paramount, you have CVS, and Nestle. Right?
Yeah, absolutely.
Tell me.
So let's start with Paramount.
Yes.
I mean, so Paramount has these storied media names. Of course, you got CBS News, you got the Paramount Studios. The stock is down by 2/3 over the last 3 years. Very much mismanaged. But we've got a new team coming in. We've got Sundance backed by the Ellisons.
Yeah.
The Ellisons are some of the wealthiest people on the planet. They play to win. And right now, of course, they're starting to assemble their talent to come in to get that streaming into place here. And what I think is very interesting is when the deal closes, the plan is for those who buy stock at $10 or $11 now can get cashed out for $15.50. Now, only half the shares will be bought like that, but if they think it's worth $15 and you can buy it today for $11, that looks pretty good. And of course, to throw you back some sports analogies, how the Ellisons were able to shift over that one quarterback from LSU over to the University of Michigan by sweetening the pot for the NIL. They win in terms of backing the football teams. I think they can win with Paramount. It's a sleeper. Buy Paramount today.
Very interesting. I like that. All right, next up you have CVS Health. It's been, what, out of favor a little, right, recently?
So, it's a healthcare juggernaut because you've got 9,000 pharmacy stores. It's a duopoly with Walgreens. You've got, through Aetna, you've got one of the largest insurance companies out there, and you have one of the strongest PBMs, pharmacy benefit managers, that they bought from Caremark. So they've got all the pieces. They're also adding in primary care. They're beefing up their online division as well. But the stock has taken a nasty hit because now the thinking is that PBMs are going to go away. But I've done this long enough.
Well, Trump had said he's cutting out the middleman.
Exactly. Everyone wants to throw things under the bus. The problem is, what are you going to get to replace it? So, over the last 40 years, we have seen all sorts of grandiose plans to get rid of the current healthcare system, and they provided great buying opportunities. I think you've got a great buying opportunity with CVS here. You got the 6% dividend. You got 8 times earnings. It normally trades at 15 times earnings. So this $43 stock could easily be a $60 stock, because at the end of the day, you get rid of the PBMs. Okay, there's going to be more regulation. They're not going to get rid of them entirely. And I think calmer heads will prevail. Wall Street will come back into this stock in 2025.
All right, last but not least, Nestle. There's room for chocolate?
Yeah, well, they've got everything. Of course, what I particularly like is the Gerber baby food and the Purina for your pets. No one does private label when it comes to your babies or for your pets. Here's a stock that's down about 40% over the last couple of years here, now has a very generous, close to 4% dividend. They're worldwide. Consumer staples very much out of favor. But if, in fact, there is higher interest rates and this economy does not grow as much as people expect, I think people are going to come back into the staples. Nestle's is one of your best. This is the kind of company with its brand names aren't going away. You could put in your safe deposit box, lock it up for 20 years, and do very, very well.
All right. I mean, that's big picture, pretty great. Any final quick thought for 2025?
Well, so, we've been...
Buy?
Buy. So we've been very cautious on Bitcoin. And I tell you, I've been reading the stories about the quantum computing that could ultimately find out a way to hack Bitcoin. But he said not to worry, it's at least 5 years away. That gives me great pause to buy something today which could ultimately be hacked by quantum computing. I'm not the computer expert, but that's just not a great reason to continue to buy Bitcoin.
David Dietze, Pre-Pack Private Wealth Management. Great to see you.
Thank you.
Thank you, David. Always in person. Thank you.